What is a 1031 exchange in New Jersey? By postponing taxes, investors preserve capital, expand portfolios, and build long-term wealth. Anyone buying, selling, or upgrading investment property in the state should understand this mechanism. The legal foundation of a 1031 exchange lies in a federal statute that New Jersey follows. When structured properly, an exchange defers both federal and state capital gains taxes. The deferral is temporary. The cost basis of the relinquished property carries over to the replacement property, and the gain is recognized when the property is eventually sold for cash. To qualify, both properties must be held for productive use in a trade or business or for investment. Personal use real estate and property held primarily for quick resale are excluded. Because the rules are detailed, a knowledgeable real estate lawyer or attorney can help ensure compliance. A 1031 exchange, also called a like-kind exchange, allows investors to replace one investment property with another. The definition of like-kind is broad. An apartment building may be exchanged for a commercial shopping center or farmland for a multifamily complex. The principal advantage is that investors can reinvest the entire sale proceeds instead of losing equity to immediate taxation. After the Tax Cuts and Jobs Act of 2017, only real estate qualifies for a 1031 exchange. Personal property exchanges are excluded. Qualifying properties. To qualify, the relinquished and replacement properties must be held for investment or used in a trade or business. Personal residences and vacation homes are ineligible, and properties held primarily for flipping do not qualify. The Internal Revenue Service focuses on the character of the real estate rather than its quality, so a range of investment properties may be exchanged. U.S. property cannot be exchanged for real estate located abroad. Process and deadlines. Most investors use a deferred exchange. To prevent constructive receipt of sale proceeds, the transaction must involve a qualified intermediary, QI, who drafts the exchange agreement, holds the funds and transfers them to purchase the replacement property. Investors cannot use their own attorney, accountant, employee, or broker as the intermediary. Two deadlines apply. Investors have 45 days after the sale to identify potential replacement properties in writing and 180 days from the sale to close on the new property or file their federal tax return, whichever comes first. These periods run concurrently. Using all 45 days to identify leaves 135 days to complete the purchase. The IRS also limits how many properties may be identified and the combined value that may be pursued. New Jersey tax rules and forms. New Jersey recognizes Section 1031 and permits deferral of state capital gains taxes when the exchange is structured properly. At closing, the state requires a prepayment of estimated gross income tax on the gain. The amount withheld is the greater of 2% of the selling price or the gain multiplied by the highest state tax rate and is credited toward the seller's tax liability. Any excess is refunded when the income tax return is filed. To record a deed in New Jersey, sellers must file a GIT representative form. Form GIT, REP3 is used by residents and by sellers who reinvest all proceeds in a qualifying exchange. Form GIT, REP1 applies when the seller receives cash or debt relief, known as boot. Transactions with both deferred and taxable portions require both forms. Failing to submit the proper forms and prepayment can delay the closing and lead to penalties. A properly executed 1031 exchange defers taxes, preserves capital, and helps New Jersey investors build long-term wealth. Because the rules are precise, small mistakes can jeopardize the tax advantages. Working with an experienced real estate lawyer or attorney who understands federal and state requirements provides the guidance needed. The Matus Law Group is a local law firm with knowledge of Section 1031 and New Jersey tax law. For assistance, contact the Matus Law Group at 125 Half Mile Road, number 201A, Red Bank, New Jersey, 07701, or call 732-785-4453.